everyone. Welcome to Tasha's Takes. I am here with Maya Mikhailov, the CEO and co-founder of Savvi AI, and we're going to be talking about AI in banking. Hey, Maya, thanks for joining me.
Thanks for having me.
So the first thing I want to talk about is I think there's a lot of untruths in AI.
A lot of hype and hyperbole.
Exactly. And I think there's a lot of narrative that what we're seeing now is like the first time that banks have ever experienced AI. And like, that's just not true. No. AI has been around for a long time. And banks have used it in a lot of ways. And so I was wondering if you could just start us off by talking us through some ways that banks have used AI in the past and how they've done that and what's been successful.
Absolutely. Well, in some respects, AI is older than I am. When we talk about AI, it's an umbrella term that covers a lot of different types of tooling. That covers machine learning. Nowadays, it covers generative AI, i.e. when the world discovered that AI existed, but it can cover natural language models, natural language processing models, et cetera. And I think that if you actually look at machine learning and processing data and turning that into intelligent decisions, that's existed for decades in the biggest banks. They've used it to do things such as fight fraud, such as make credit risk decisions, improve personalization processes. None of that is new. Taking your data, finding patterns in your data, that machine learning is not new. Now, in the end of 2022, 2023, all of a sudden, generative AI was unleashed on the world. It existed before then, but it really became into the public consciousness when OpenAI dropped their ChatGPT tool free to the public. And all of a sudden, AI became not just this nerdy data thing that some people at the bank were doing that nobody wanted to make eye contact with. And they kept saying data, data, data. But it all of a sudden became this concept of I can talk to a model and it can generate responses. It can create data from the data that I'm giving it and from other data that it's sourced from the internet. And that was a new reawakening into these types of transformer models and what they're capable of. And so not everybody, but some people may have thought that AI was discovered only recently, but in fact, the biggest banks have been using it literally for decades.
Yeah. And if we think hypothetically for a moment, so yes. We've had it for a long time in certain forms, and banks have used it for a long time. Hypothetically, now we have large language models, agents, workflows. What should be possible at banks? How should they be able to use AI, and what should it do for them?
Well, first of all, and this is a really important concept, I believe, but banks should be able to use AI to turn their proprietary data and their proprietary processes into something I like to call intelligence capital.
Intelligence what?
Intelligence capital.
Okay, intelligence capital.
So they have loans on their books as assets. They could have real estate on their books as assets, but they're sitting on this enormous pile of data. But they haven't transformed that data into intelligence capital, meaning they haven't operationalized that data for the most part. It's, that saying data is the new oil? Well, oil on the ground doesn't do anybody any good. Oil in your car, when it's refined and it powers a decision, it powers a thing you want to do, is all of a sudden valuable. That's what AI is when you take data and you transform it into intelligence capital. It's being able to take those proprietary insights, those proprietary knowledge they have of their customers, of their processes, of better ways of doing business, and transform that into a better organization for the future.
And so what are some of the practical things that can be done with this capital? Like what should they be able to do?
So many. So I like to bucket it into 3 buckets.
Okay.
The first is they can lower risk. Now that's, very important for cable as well is how can you lower risk? How can you test risk? Well, AI is really good at both figuring out vectors of risk through analyzing patterns, helping you access data in documents so you can make better risk decisioning and look at your processes and better codify those processes and have them accessible in a natural language form to your front end employees so that they can make better decisions instead of looking at a 3,000-page PDF that no one's ever read. So that's one category is risk. That can include anything from automation and SAR reports, loan assessment risk and delinquency risk, et cetera. The second big bucket is operational efficiency. How can we look at the processes that we have and become more efficient? And some of those processes may be proprietary. Some of those processes aren't proprietary. but how can we look to run a better bank and return on capital? Or in credit unions, how can we provide more member value? And the third bucket is obviously like enhancing member value if you're a credit union or if you're a bank, growth. How can we encourage loyalty and growth? Because let me tell you, the fintechs these days, the Robinhoods, the Coinbases, all of those, the Chime banks of the world, the SoFis, they are now using AI and advanced modeling to help create these sticky relationships with the customers, and then they are expanding their services. How can banks compete by creating stickier relationships, by surfacing insights for their customers? And I'm not talking about pushing product. I'm even talking about saying, hey, Tosh, we're looking at your bank record and it looks like you might have a cash flow problem next month. Is there something we can do to help? Or we have this new product that can smooth it out if you're a gig worker, so that you don't have to worry every single month that you're going to have overdraft charges and fees. So there's so many products they can use to create these sticky relationships that they're really not taking advantage of right now.
Yeah, I really like that. So 3 buckets: risk, operations, and growth, essentially.
Correct.
Yeah,
correct.
Really interesting. And so if all of that is based on this intelligence capital, this data that sits there, how do banks actually go about unlocking that? What do they need to practically do to be able to take advantage of these 3 buckets?
So practically, they have to think about this strategically. You can't just sprinkle AI on it. And this, for me, it's been very frustrating as an AI practitioner who's been in the market for quite a few years, who's been working with machine learning models since 2014 and working with these banks and these regulated institutions. If you start with the strategy of, my CEO asked for AI, we're going to sprinkle some AI on a process, or we're going to show them a really cool lovable demo in a lab, and I'm sure that's going to satisfy their AI needs. Or, hey, I bought a dozen Copilot licenses, check that box. That's not enough. What you have to start with is your business strategy and goals. And this is what I tell everyone. We run a ton of use case workshops for banks, and we start with their business strategy. And then we say, what tactically are you trying to achieve this year to support this business strategy? And then you ask yourself honest questions. Is this an even AI solution here? Or is this just a practical process that we need to rethink the process, and with AI, it's not going to make it better? Or how can I enhance this personalization? How can I measure it better? Saying I want more personalization doesn't help. Saying I want to increase how many times one of my customers interacts with a touch point from the bank. Now, that's something that you can measure. That's something you can activate on. And then most importantly, do we have the data to support any of this? Like, one of the biggest challenges is that sometimes people think about these use cases and they're not thinking, have we collected the data? Can we collect the data? Where does that data exist? And is that data fresh? Because even if you're talking about large language models, and a lot of banks right now say, I want to create a knowledge base and I want to make an interactive chatbot on my knowledge base. Great. So if somebody asks your chatbot, what is the proper policy for this? What document do they pull from? What if this department is operating in a way that's not exactly reflected in your current knowledge base? How will you update your policies and procedures?
And that's interesting because we've talked a lot in the past about a lot of the banks that we speak to day to day for both of our companies. They don't necessarily have all of this data in one place in a nice data warehouse, carefully modeled. They might have a lot of their data around processes just in spreadsheets, just in Word docs. And so how can banks in that situation get to the point of being able to unlock some of these advantages using AI? Can AI take in those types of data?
Oh, absolutely. Absolutely. I think there is a myth exactly that what you're saying is that I had to buy this whole data architecture. I have to have real-time data. I have to have transformation. I have to have all this piping in place. Listen, for some use cases, you can start with something as simple as a spreadsheet. And in fact, a lot of banks right now interact with core data with weekly CSVs. Those are just spreadsheets with lots of data on them. And those columns can be used to help make certain decisions and actions with AI.
Yeah, that's actually a really good point that I hadn't thought about before, which is that a lot of banks do all of their core settlements just via CSVs.
Absolutely.
And there's no reason why that's going to be used. And so with regards to banks specifically, with the sensitivity of the data, all of that PII that they have, are there any additional things that they have to think about that's sort of above and beyond other companies trying to use AI?
Well, I think every company, and this is a growing conversation when you start thinking about agents. So an agent is a series of processes. So it's not just a chatbot talking about something, it's actually taking action and doing things through software and through these agents that are powered by MCPs. And I'm using terms that some of your folks may not know. An MCP is just basically a type of server that takes a large language model, for example, or a language model, and takes some of those interactions in language and converts them into actions like, go get me the account information, go make a decision over here with an ML model. And it stitches it all together. So you're not just talking, you're actioning. Sorry, I totally lost my thread of thought with what you're saying. But one of the big things that banks need to think about is permissioning.
Yeah.
And this is super important, not just for banks, but for enterprises in general. When you start having agents work across processes and you start having frontline employees being able to chat and interact, who has permissions to do what? Who has permissions to see certain types of data? Who has permissions to write to certain data systems versus just read from those data systems? Those are all considerations that you have to have as you start building out these agentic flows.
And do consumers have any rights or abilities to sort of opt out of their data being used by banks in this way?
You know, that's a really excellent question. I think something with 1033, consumers will actually be more empowered to take their data from one financial institution to another. So I think the power dynamics may actually shift there completely, where consumers, for example, hypothetically speaking, a consumer can have a rate-seeking agent that, jumps from financial institution to financial institution looking for the best deposit rates for a particular consumer. And they can permission that through a third-party fintech doing that, for example. So can consumers opt out? It's hard to say that they can because their data is being used in AI in so many ways in the bank as long as they can keep it secure. I'm not sure. I'll even say I'm not sure they'd want to because part of the mechanisms in place where AI is used is like anti-fraud protection. If you suddenly said, hey, I don't want you looking at my account anymore to see if there's fraud, I can't imagine any consumer would sort of opt into that experience.
And that leads me to another thing that we have talked about previously, which is, should banks be using the big famous LLMs for a lot of this work? Or there has been a resurgence of smaller, much more tailored small language models that banks can buy or even train themselves. How should banks be thinking about the difference between LLMs and much smaller models, and whether they should be training and owning their own models or whether they should be using these big publicly available ones?
So first of all, I don't think that any bank should put their data in a public model where it's training back to that public model.
And that's just usually a switch in the settings.
Don't do that. Don't do that. No, but it actually opens up a broader point, which is once you put your data in a shared model, in a shared vendor model, even if you ask for your data back and ask them to delete your data, you've actually lost all the knowledge of that data. This goes back to the intelligence capital point. Once you give away that last mile of the embedded learnings in your data to a third-party model, it's gone. You can't unbake that cake. It's like asking for the sugar back once you've baked a cake and saying, oh, wait, I don't want the sugar back. It doesn't matter. It's gone. And so that's why I think it's so important for banks to build their own intelligence capital in many instances where they can control their data, because the insights about their consumers, when you think about how banking is evolving moving forward, their insights about their consumers is one of the most precious things they have, along with efficient use of capital. So it's important that they take control over it. But getting back to like what we were speaking about, which is where this data is going and how they should be thinking about small language models versus large language models. Listen, you don't need the corpus of human existence on the internet or 10 million Reddit comments or 10 billion Reddit comments to understand how to read a PDF. So I, like you, am a huge fan of privately run lockdown small language models that are purpose driven to certain use cases, where you can say, hey, this model runs much more efficiently. It can scale much more cost effectively than running a large language model, and it can accomplish this discrete task. So in that sense, I think banks actually, as this market is evolving, are going to have many more options to host these small language models and to use them for these tasks without having to worry to go to the large foundation models for everything.
And how would a bank literally go about doing that? Do they come to Savvi? Is that like...
Well, I mean, I would love for them to come to Savvi, obviously, but SpawnCon. But no, every journey starts with the first step.
Yeah,
and the first step is understanding the strategy. And that's something that we've been helping tons of banks with, is understanding how their strategic goals and their data overlay with a cohesive AI strategy. And from that use case workshop, you can develop prototypes, you can develop a central AI strategy, which we call an AI Center of Excellence in a box, where you can start building out those foundations. But you have to lay the foundation of strategy, and then on top of that, add data, and then on top of that, add AI.
Okay, really interesting. So something that I have been thinking about a lot recently is, it's my big bet for 2026 and beyond, is we're going to see just an insane number of bank M&A.
Yes.
And I think that obviously our current administration is going to allow that to happen, and I think wants that to happen. But I think that what we're going to see is even more bank acquisitions, because the larger banks are going to be much quicker to using AI, and they're going to find a lot of cost savings. I think the latest report was JP Morgan has saved $2 billion already.
JP Morgan spends $2 billion a year, and Jamie Dimon just said that now he's at break even.
I mean,
that means everything else is just going to be gravy.
And so banks like that, who are finding such vast cost savings already, are so much further ahead of the small community bank, maybe sub $1 billion in assets, that might be using Copilot. They might have those 7 Copilot licenses. They might be using some machine learning in their transaction monitoring or in their fraud detection, but they are not yet seeing the huge cost savings just across those 3 areas that you mentioned,
right.
Risk, operations, and growth. And so the idea that a large bank can actually buy up a small bank and get even greater economies of scale because of their use of AI is something that I think is going to speed up more acquisitions. What do you think about that? And how do you think?
We're definitely seeing that there is a group of banks who just get it. They've spent the last couple of years building out a centralized data layer where they can ingest not only core data, but all the data that they're getting from fintechs. Because I think that's also very important. Right now with the smaller banks, it's not just the core that has your data. It's every fintech partner, your LOS partner, another partner over here. All of a sudden, their data is hyper fragmented. There is a tier of banks. And listen, some of them are smaller than you think. I talked to a bank that was just over $2 billion in assets who has bothered to build out their own kind of data warehousing system, because they're looking towards the future and they're saying, listen, we need to have total view of customer. Because the only thing that's going to distinguish us moving forward, the only thing that's going to make us competitive going forward, is how can we overserve this client that we understand?
Yeah.
And then there's going to be other banks that are just going to get swept up in, we're here, we have this pile of money and customers, we don't know what to do with them. Maybe our management and growth has been stalled because we haven't advanced these modern data processes. And I believe, like you do, they're going to get bought up by these sophisticated players who, even if they're not large in size, have a little bit of forward vision with what it means to compete with these fintechs and these larger institutions. And it all starts and ends with, I hate to say it again, owning your own intelligence capital, being able to take your data and your processes and transform that into an asset that actually makes your organization differentiated, unique, and able to outcompete in your niche vertical. You don't have to outcompete on every vertical. But for example, if you're a bank in the Northeast that's really good at multifamily housing contracts and multifamily housing lending, and you're just an expert in that, you can outcompete in that niche and grow.
And any small language model that they are able to train with their data is going to be so much better than even any large language model with that
Any
data.
ML model they train with their data is going to be so much better.
Yeah.
Any model they train with their data, any agent they build with their data is going to be so specific to their audience and their audience's needs. It's going to be inherently better than, let's say, buying a generic credit model off the shelf and then hoping it fits their particular audience.
Yeah. Great. Okay. So my final question then is, this has been awesome. I think it's really interesting. I think banks getting really, really focused on where their data is, understanding that first and foremost, aligning with their strategy. It makes a ton of sense. I think the thing that is also on a lot of people's minds is the possibility that we're in an AI bubble. And there are lots of very interesting contracts going on, and those awesome graphs where you can see the top 10 firms in this space who are all just selling stuff to each other. It seems like, how can banks protect themselves from any future AI crash? What would enable a bank to get involved in AI now and then not suffer if there is an AI bubble?
So when we talk about an AI bubble, I really want to be specific here. What you're talking about when you see all these charts and graphs of the circular economy is a lot of infrastructure. It's a lot of chips. It's a lot of data centers. The same thing happened with the dot-com bubble. The bubble that popped was very much an infrastructure bubble that popped, first and foremost. They had overbuilt capacity. They had overlaid fiber for usage that they didn't see until a decade later. Now, some may argue that they are overbuilding data centers and capacity, that they're knife fighting for chips that have a pretty steep depreciation curve, and that this will all pop. Now, others would say, hey, we are only in the beginning stages. Large language models, actually, that's kind of kids' play. When you start talking about world models where robotics come in, those need a ton of processing power. And that's where the AI market is moving. But let's go back to the bubble. Even if an infrastructure bubble pops, the application layer of AI is undeniable. Just like even when the infrastructure bubble to the internet popped, out of that came Amazon. Out of that came the very companies that sort of powered the e-commerce world that we live in, Google and all of them, that powered that world that we live in today. So the application layer does not go away. The usefulness of a fraud model does not go away because Microsoft stock goes up or down, or because, Oracle stock could go up or down. It fundamentally doesn't change.
And so as long as banks are really being focused on their own strategy, their own intelligence capital.
Unless they're building data centers, I really
which they shouldn't be doing.
Well, I mean, some of them are financing it, but I cannot comment whether that's a good strategy or bad strategy. It may be a great strategy right now for them. But the point is, if they focus on servicing their customer, as they understand their customer, and making sure that they're not only providing products that are sticky to that customer, but experiences that are sticky to that customer by a value for that customer beyond a checking account or a savings account. And really understand the life stages they're going through and suggest better products at those life stages. Or if it's a commercial bank, then better understand their small businesses and maybe help them with strategies and products that can help them succeed. The value of that never goes away. The fact that AI is a tool to accelerate that does not go away if a Blackwell chip is worth X today or Y tomorrow.
Awesome. There you have it. Okay. Well, thank you, Maya, for joining me. I really enjoyed this conversation, and let's go have a great Money 2020.
Absolutely. Thank you.